set the recording. Recording is started. So welcome everyone. I am Samantha Williams, President and CEO of the Collaboration of Minority Women Professionals. As you saw in my emails, I am also the President and CEO of Sam's Word, and I'm the head coach at Melanated Business Coaching, providing business coaching for Black women in business. I'm also the program manager for the newly launched Knowmpreneurs Growth Lab. So Latrice, you were asking for this. Knowmpreneurs is hosted out of Known Co-working in New Haven. And right now we're actively looking for businesses to participate. Those businesses need to be minority owned, located in the greater New Haven area, have less than 500,000 in revenues, and be in the growth phase of business. So spread the word and contact me. So our collaboration is a membership-based Black women-owned organization with the mission of increasing the visibility, capacity, and business profitability of professional Black women. With almost 40 members in 8 states, we are growing rapidly, but we're missing you. So check out the link I'm going to be putting in our chat and visit our website to learn how you can join today. So the goal of the collaboration is to acknowledge, support, and celebrate the growth and development of professional minority women by propelling them to excel with and across their professional business arenas. The collaboration offers activities such as virtual networking opportunities, in-person networking events, Zoom training and professional development, continual education opportunities, seminars, workshops, and more. So today our moderator is Latisha Douglas. She is our Vice President and the owner of Komoda LLC. Latisha is a small business automation and data analytics consultant, and she facilitates financial literacy training for teenagers, young adults, and the local community, and also business professionals. Latisha is an accomplished technical and analytical professional, and until earlier this year, she devoted over 20 years to Prudential Financial. Her final role with Prudential was as a senior database specialist, where she helped manage and maintain system data and servers for new and existing financial services applications. Latisha serves on the Connecticut Alliance of Foster and Adoptive Families Board of Directors, and she is matriculating towards a dual master's degree in data analytics and an MBA in technology from UConn. Latisha has a Bachelor of Science in Computer Science from Seton Hall University, and she is a MongoDB certified database administrator. Ask her about that, because I don't know none of that. Our panelists today, welcome ladies. We have Shantel Garcia, Latrice Allen, Kim Dansby-Berry, and they are all members of our collaboration because we enjoy providing opportunities to highlight the skills, expertise, and knowledge of our members. If you are a member and there's a topic that you want to present or a panel you'll like to host and sit on, let us know. We're going to hook you up and provide an opportunity for you. So our panelists, Ms. Shantel Garcia is the principal and owner of Innovative Consulting and Solutions, and she partners with executives and entrepreneurs to help elevate their businesses. She is also the CFO at Neighborhood Music School and has over 13 years of managerial accounting and operations experience. Shantel earned her MBA at the University of New Haven, UNH, and is a candidate for the Management Accounting and QuickBooks Advisor certifications. Shantel is becoming an accountant. Oh, before becoming an accounting professional, Shantel owned a clothing line, Devour, is that right?
Yes.
Clothing company, Devour, where her pieces were featured in fashion shows in Connecticut, Rhode Island, Massachusetts, and New York. Hey. She did not come to play. Then we have Latrice Allen. Latrice is a finance professional who has been working in banking and finance for 15 years. Latrice brings the heart for the community with her drive for financial wellness. Latrice's goal is to help people understand finances and then help them apply her insight to their everyday life by creating systems that are easy to use and implement. We're going to learn all about that today. Then we have Ms. Kim Dansby-Berry. Kim founded Borrell, is that Borrell, Kim?
It is. That's it.
Insurance brokerage to provide business owners with a holistic approach to insurance. She provides guidance that's lacking in the general market. As a sales manager for Capital Indemnity Group, CIG, Kim drew on 18 years of experience with Fortune 200 companies in the investment and insurance service spectrum, contributing to her first year sales in excess of $16 million.
Wow.
As a financial advisor with Morgan Stanley, Kim completed her first year of production and she ended the year with 18 million in assets under management. And she completed her second year with 42 million in assets under management before leaving to raise her family. Kim attended Temple University and holds life, health, and property and casualty insurance licenses in Delaware, New Jersey, and Pennsylvania. She has held FINRA 7, 63, 65, and 24 certifications. So I am so glad to have these ladies here to get us all together with our financial needs. And I'm going to turn it over to Latisha Douglas, who will be moderating today.
Hi, everyone. Thank you. Thank you, Sammy, for the introductions. So we have a lot of info. So I just want to jump right in and get started with all our panelists. We're going to start with the basics, your budget, right? So I think we're all familiar with budgeting when it comes to our personal finances, but the same rules apply on the business side, right? When you talk about business finances, it always starts with your budget. I personally like to call it my money plan because I know that the word budget has such a negative connotation to a lot of people. So Shantel, I want to start with you.
Sure.
We know budgeting and budgets are important. Can you tell us how to start a business budget? What's the best approach in getting started if you don't have one?
Absolutely. So you mentioned it. It's a plan, right? It's really a plan and a roadmap to getting to where you want to go. And really the best approach is understanding your end goals and working backwards from there. So your budget would include your products that you would want to sell, your services that you're trying to render, which will then be your revenue. Then you want to identify your expenses associated with reaching those goals or reaching those revenue targets. And the difference between those two would be either your net loss or your net profit.
Okay. And I wanted to share this. I did put together a little slide when it comes to the different buckets and allocations that you want to have with your budget. So I'm just going to share my screen really quickly. Can everybody see that?
Yes.
Yes.
Right, so when it comes to creating a budget, there's different buckets or allocations that we want to have. And we want to make sure that we're allocating the right amount to each bucket. So Shantel, I'm going to reach out to you again. Can you talk to us a little bit about how to actually create your buckets and what kind of systems and things that you could put in place to keep it updated?
Sure. So if you're starting from scratch, again, you want to think about the end goals and the costs associated with those goals, those revenue goals. So let's say you're rendering a service, for example, let's say bookkeeping services. Well, what are your costs associated with that? It would be your salaries. Well, how much are you going to pay your bookkeeper to manage the books for someone, right? Sorry, we lost the pie chart there.
Sorry.
It's okay. We want to talk about the salaries associated with that. Then you want to also identify any operational expenses. So to run your business. So let's say you may have marketing expenses. You have your office supplies expenses, dues and subscriptions. So dues and subs would be like your Calendly subscription, your subscription for your website, your QuickBooks subscription. And then you want to also account for any healthcare and retirement expenses, right? So let's say your bookkeeper, they're full-time, they qualify for healthcare. How much is it going to cost you to provide that expense? And so you're really just keeping a chart or a spreadsheet listing all of the expenses associated with rendering this service. You want to account for your taxes because at the end of the year, you will need to file your taxes and pay taxes on all your monies earned. So really just coming up with a plan to understand how much net profit you're going to bring after you account for everything. There's two approaches. Some you have businesses who have been in existence for a while and they have a better understanding of their trends and what their expenses are and can adjust accordingly as they go. And then you have businesses that are just getting started where they come up with a plan and they're realizing, I didn't charge that customer enough, or I didn't account for these things. I think it's very important when you're starting off a business is to be very flexible, or really budget conservatively. So this way, you know, the impact of things that you haven't foreseen or you did not budget for would be very minimal. So again, really understanding and identifying your services and your products, understanding all of the salaries, the healthcare or operational expenses associated with those services or products, and then you'll have your difference from there.
Yeah. And then with, when you're, you know, this may be a different conversation, but when you're coming up with your pricing, you want to take all of these things into account, right? So if you know you have to pay taxes on your business income, then you want to think about that when you're setting your prices, right? And every time, I know I personally, every dollar that comes in, I make sure I allocate it to each one of these buckets. So I know that that is already taken care of, taxes are set aside, the money that I want to save is set aside. So it just makes things easier. And then I personally automate it, right? Everything I spend some time getting everything set up, but once it's set up, it takes very little time on a monthly basis or a weekly basis to update everything, because everything is automated.
Right.
I have a question, ladies. What if you're just starting out and you don't know how much your taxes are going to be? What do you suggest for putting something towards taxes?
Sure. So I always advise you talk to your tax accountant, but normally the go-to is the 30%. It is 30%. Another thing that I would actually add to this allocation would be how much you want to take home. So if you think of your service or your revenue being $1, right? And the 20% would be, let's say, the salaries that you're going to pay other individuals, right? That's 20 cents. The 10% for your savings and investments, that's 10%. That's 10 cents, right? Healthcare, 10 cents. 30% for direct operational expenses, 30 cents. Your taxes, 30 cents. But if you want to account for actually having money left over to reinvest into your business, right? You want to account for that as a percentage as well. So let's say we knock down your direct and operational expenses to 30%. You have 10% left over. That means your take home or your net profit would be the 10%. So again, you really want to think about identify those goals and work backwards, right? So again, the dollar is like the best approach and best example that I can give. It's like, okay, I can break this dollar up into nickels, quarters, and dimes, and maybe even pennies, and really identify all the different ways, right, that you can break out that dollar into those different buckets. But you should definitely account or allocate for what you want to take home after all of your expenses are accounted for.
Thank you.
Of course.
Thank you. I'm going to stop sharing for a bit. And I wanted to jump more into the tax piece, right? So Latrice, we know that taxes are important, and we know that we should be setting aside a certain dollar amount for taxes every month. So can you talk about how often we should be paying taxes when it comes to our small business income?
Yes. So I found that with working with a couple businesses and creating systems for them for looking at their monthly budgets, that they contacted me when it's tax time, right? When it's time that April 15th date is creeping up. And I found that it creates a lot of anxiety, creates a lot of stress if you haven't really had a system throughout the year. So what I realized in networking and talking to CPAs is that you can pay your taxes quarterly. You don't have to wait until that one time a year and get that large bill. Once an accountant looks at your business, has your information, you can get set up on a system to pay quarterly. Now, what happens if your business decreases during that year? Then when you go to reconcile or file on April 15th, then you don't have to pay as much. That money will always balance out at the time of tax time. Or let's say you had an increase That just means they do take in consideration what you paid quarterly, and then any additional you would still pay during the annual time. But what that does is it allows for less stress during the 15th, not so much trying to get those things into your accountant and meet with them at the last minute. And it also creates accountability for you to be able to gather your business documents at least once every quarter and meet with your CPA. It creates a relationship with your CPA for them to know and understand your business. And that is important for knowing what to deduct.
So can you talk a little bit about, you mentioned the documents that you have to give your CPA. Can you talk a little bit about what those documents are?
So your documents are, any expenses that you have, receipts, and those things you're gonna use to create that budget sheet that Shantel talked about. But you're also going to be able to create other important documents to give to your accountant, such as a profit and loss statement. So your profit and loss statement is a document that really just shows your expenses coming in versus your expenses going out, usually on a monthly basis. But all that depends on the type of business that you have. So if you have a service business, like a massage business, you may not be able to deduct a lot of things like going out to eat or a lot of things like that. But your accountant, you're still going to give those receipts to them, right? But they're going to know and understand what kind of business you have. But if you have a different kind of business where you're out meeting clients, you're going out, all those things are important for your accountant to know. But you want to build that profit and loss statement at least to be able to give your accountant. And when we all met, we also talked about a budget sheet and a cash flow analysis. And that goes a little deeper, but you want to be able to track those finances within your business to be able to leverage how to grow and how to move once you get to that 3 and 4 year mark in your business.
Okay. Now, I know, Shantel, you are very big on those statements and documents. So can you just go into a little more detail on profit and loss statements and cash flow statements for those that don't know?
Sure, absolutely. So again, budget is your plan, what you set up at the beginning of the year or your fiscal year. And then you have your P&L. Your P&L really tracks your performance against your budget. So it captures all of your revenue for your services rendered or your products sold. And then you have your expenses. So as Latrice had mentioned, and as we saw on the pie chart, all the expenses, your salaries, your office expenses, so on and so forth. The difference between the two is your net profit, or meaning if you have a take home, a positive take home, or your net loss, meaning there's a negative, meaning your expenses exceeded the amount that you brought in. And really your P&L is a snapshot during a certain period of time. It doesn't really roll over from year to year. It's really a snapshot from the beginning of either your calendar year or your fiscal year to the end of it, or from the beginning of a month to the end of a month, or beginning of a quarter to the end of the quarter. Your cash flow, however, really is actually different than your P&L. Your cash flow really accounts for all of your cash activity. So it can account for loan payments. It can account for payments for equipment. It would account for, let's say, any actually monies you receive if you take out a loan from a bank. It's really items that really sit on your balance sheet and your P&L. So it's any monies that hit the bank account, monies that go in, and then any debits or monies that come out of it. The two work hand in hand to really give you a snapshot of the performance of your business. So you may be accounting for things or expenses that actually didn't require you to physically go into the bank account and take monies out. A good example would be like depreciation. I'm sure many of you have heard that term. It's something that you account for on your P&L, but it isn't an actual cash transaction, right? So a cash transaction would fall on your cash flow report. And again, it really shows, your cash flow report really shows what monies are coming into your bank account and what monies are going out, the inflows and your outflows. And then you have your balance sheet, which lists all of your assets, all of your liabilities, and the equity of your business. So a good example of your assets would be like your furniture and equipment, your accounts receivables, meaning monies that's owed to you, your cash balance, like the balance that's in your bank account. Liabilities would be monies that you owe a lender, credit card debt, monies that you owe someone or a vendor. And then your equity, meaning the value of your company or your business, right? So that net loss that shows up on your P&L at the bottom, that net loss or that net profit really moves your equity up and down. So overall, if you go to a lender and they ask for your financial reports or your financial information, you want to provide them with your P&L so you can show the performance of your business, your revenue and your expenses, your cash flow, meaning how's your cash moving from month to month, right? Is there enough money in your bank account for you to actually operate? And then your balance sheet. Well, how many outstanding accounts do you have? How many other lenders do you owe, right? You're asking me for money, but who else do you owe? And then the equity of your business, the overall value. I know that was a lot, but yes.
It does. It sounds like a lot, right? But the good news is there's software out there that'll do all that for you, right? I know I personally use QuickBooks.
I do as well.
Yeah. I link my business account, checking savings account, to QuickBooks. So every couple of days or once a week, I just go in, I make sure that all the transactions that hit from my bank accounts are allocated correctly. And then you could literally generate your P&L, your balance sheets, your cash flow statements with a couple clicks of the button.
I love QuickBooks. I love it. And you're right. Yeah, it really captures all the activities and summarizes it up into those very important documents and reports.
Yeah. And I mean, there is a small cost, but it's definitely beneficial. Yes, and I know I have what I call Finance Friday. So every Friday, I always make sure to spend some time looking at my business finances. And at least once a month, I will print those reports. And sometimes just looking at the numbers on paper, you see things that you didn't even realize, like, oh, why am I spending so much money here? Right. Or why is my income, I see a downward trend in my income. I need to step it up. So it's always a good idea to look at your reports on a regular basis.
Absolutely.
Finance Fridays, Latisha, you try to make that sound so much fun. Finance Fridays.
It is fun.
I personally like numbers, so that's the highlight of my week.
We love our spreadsheets.
Yes.
You definitely have to create a pattern for yourself just so you, and 30 minutes here and there will save you hours later. So if you make it a 1 day a week or once a month for an hour, you're gonna save yourself a lot of stress and heartache and be able to dedicate more time to what you do.
Right.
And just a plug, right? So we saw with everything that went on this year with COVID, right? We had a lot of grants and loans being offered to us as small businesses. Right. And we really saw the impact then, right? There was a lot of businesses that wanted to apply to the PPP, that wanted to apply to the EIDL loan and grant, but couldn't because they didn't have their documentation in order, or they didn't have the time it took. That the EIDL loan, how quickly did it close, right? Like it was like millions of applicants within the first day or two. So spending that couple hours a week or a couple hours a month will help you when it comes to put yourself in the position to apply for things. And saying that, there is actually, I don't know if all of you ladies have taken advantage of this, but there is a $5,000 grant
in Connecticut.
Yes.
Sammy, can you talk about that? Because the deadline is today at 5 o'clock.
The deadline is today, okay? So we have the Connecticut CARES Act. They have $50 million that they are giving to 10,000 small businesses in Connecticut. And they have underrepresented communities that they have allocated. So they're making sure, what happened with PPP, a lot of the non-minority businesses came in and they swooped up that money. Connecticut is making sure that there's funding available specifically for minority-owned, Latinx-owned, Black-owned businesses. And I found out today from one of the boards I sit on, our people are not applying for this loan. It's $5,000 that are not a loan, grant. $5,000 grant is sitting out there waiting for you. All you have to do is apply. It closes today, and you're pretty much guaranteed the $5,000 if you apply. Even if, look at the criteria. What I'm being told is, regardless of your numbers, apply for the grant. The grant will be paid out by December 30th. Regardless of your numbers, apply for the grant, okay?
And whatever monies they don't use up, they have to return, right? So which is why they're really trying to get rid of this money and give it out. So absolutely.
Yes. And then also what came up on the board meeting was people were saying, but it's only $5,000. Why should I do it? It's only $5,000. Well, one, it's $5,000 more than you have, right? And then two, if you don't use it, if we don't go after it, the government's going to be like, oh, minority-owned businesses complained that we didn't give them funding, but when we tried, they didn't come get it. And then we're not going to get additional opportunities, right? So go after that $5,000, let them know that our businesses need it, and force them to open up and allocate more money, more funding just for our businesses.
The other thing we learned on that the Zoom with BBA is that let them deny you. Don't assume that you don't have something, you're missing something, you owe DRS. What we learned from Department of Revenue Service, we had a call a couple weeks ago before it launched, was that go ahead and let them deny. It's not going to set a red flag for something that, all those preconceived things apply, because the money has been set aside, and we need to show those numbers. We need to show the state that we're here.
And Brittany has go ahead.
This one was actually a very simple application. I mean, it took 5 minutes.
Yes. Brittany has a question if nonprofits can apply. Nonprofits can apply. If you apply and receive the PPP, the EIDL, you can also apply. It just does not apply if you are also looking for if you're an arts program looking for funding under that specific arts grant. Then you pick and choose. Do you want the arts funding grant, or do you want this CARES Act grant for $5,000? But if you're in the arts program, profit or nonprofit, you have a choice. Everyone else, you have this CARES Act grant of $5,000.
Okay.
Latisha, I also want to piggyback on what you had said earlier about bookkeeping. A lot of entrepreneurs they just look at it, they get intimidated, and they walk away from it. I would say if you can't afford or don't want to spend the money on a software, try a spreadsheet, right? Try to put together a spreadsheet just to keep track of all of your expenses month to month. It doesn't have to be sophisticated and sexy. It's just putting all your information in one place and being able to keep track of it. But if you're willing to take a risk, yes, try a software like QuickBooks. It's very intuitive, very user-friendly, and easy to use. You can YouTube videos to figure out how to use it. If you're crazy busy, hire a bookkeeper. They can help keep track of those things for you, really organize your data, your documents, get everything into the system, and then can bring it to your CPA. Or bring a box of receipts to your CPA and just cut a check and have them do it. So those are your options.
Yeah, CPAs don't like the box.
They don't, and they will charge you an arm and a leg. So it's cheaper for you to get that QuickBooks subscription or to maintain that spreadsheet.
But, I mean, to really break it down, there at Walmart, you can get an $8 file box. Very thin. You put file folders in, throw your receipts in there by month.
Yes.
And that will save you $300, or I think the accountant said she's charged, X amount per hour to go through that box. So put that together, and then it's those simple organizational tasks will help you with knowing what you did. You're not going to remember why you went to Walmart and bought something 6 months ago. You're not going to remember. Right. And then if you want to get you have your receipts, you built a small spreadsheet, then all you have to do is take that spreadsheet for the month, put it in the file folder for that month, and that's it. So it is really that simple.
Yeah. And last thing on that, I know QuickBooks sometimes offers a free trial. You can
Oh, wait, Latisha, Kim had a comment.
Yeah, I actually am old school. So years ago, I started with those dollar shoe boxes, those plastic boxes you get from anywhere, Dollar Tree. I happened to get mine on clearance at Target. I labeled them. And so one is travel, entertainment, marketing. I can't remember the other because there's 5 of them. I dump my receipts in the appropriate box, and then at the end of the year, since the kids are now old enough, I pay my kids to type the receipts into my Excel spreadsheet. I keep running spreadsheets from year to year. They plug the number in. I email the spreadsheet to my accountant, and so yes, they hate boxes, but she actually doesn't mind because I actually email her the completed spreadsheet for her to just plug in the numbers.
Right. That's great. Yeah.
Latisha, you're gonna kill us because we keep interrupting. So one more thing too, if we're talking about P&Ls and really tracking your performance, you want to do this on a month-to-month basis, right? So at the end of the year, you're going to realize like, oh, shoot, I didn't make any money. Or, oh, shoot, I spent more than I was supposed to. Or shoot, I should have gotten more clients or taken that engagement or pushed to sell more products. You're really not going to know what your performance looks like against your budget if you're not doing it on a more frequently, right? And on a monthly basis. So, I mean, Kim got it going on. She got it like that. But if you want to know where your money is going, I suggest getting into QuickBooks. Or again, if you hire someone, even if you hire someone, it's always good to be well-versed with even like the basic tools and understanding of like a P&L, the expenses, things you can write off. Because I've heard stories of even bookkeepers kind of dipping into other, business owners' monies. And so if you don't know what's happening, or you're not well-versed, or you don't even take a look at QuickBooks because you're so afraid and intimidated by it, someone could take advantage of you. So
I want to say 2 things. One is you're so right, because don't forget, people charge you. It's a service they're providing for you. So if you need your bookkeeper or accountant to run these reports for you every time you need a P&L, income statement, cash flow, whatever it is, they're going to charge you. If you can start using QuickBooks and then get into running your own reports, then you can also save yourself some money then. But then I have a question to you ladies. So I have QuickBooks. I use debit card for everything. I don't do anything with cash. Everything's tracked through my my business account, right? So that's another thing. Did we mention having a separate business account, right? So everything's tracked through the separate business account. But then when my bookkeeper is doing it, sometimes he gets delinquent. So it's like 3 months later, even though it's in my banking system and in QuickBooks, he'll give me a spreadsheet and say, what were these items you bought? What were, what was the categories of these expenses? How should I categorize it? Or what did you buy from Amazon on May 2nd? So is there any way that, like, I do have a spreadsheet, but I'm not tracking dollar by dollar, independent expenses. But when he comes and I just see it's a withdrawal from the account, what can I do?
I'm not sure what's the question exactly.
When my bookkeeper is doing my books and he needs to know what these expenses are.
Yes.
I would say, so this is where our Finance Fridays come in, right? So you have your QuickBooks, your bookkeeper has bookkeeper access to QuickBooks, right? So I would say every Friday, go in, and I forget the exact name of the field in QuickBooks, whether it's a tag or a memo, but put in a comment, go through all the charges that came in that week. And for things like Walmart, Target, or especially all those generic ones where
so I can classify it myself, like in the moment or once a week.
I would let him classify it. Use that, whatever that additional field is, use it, put in a comment about what that purchase was for.
Okay.
So then when he goes in, he could see that and he could properly classify it.
Okay. What doesn't lie is your bank statement. I worked for a while helping people during the 2008 housing crisis to help them stay in their homes. And it's very common for people not to know where their money is going. Where are you spending your money? Your bank statement doesn't lie. your bank app is so important because like on my bank app, I can see like the pie chart where spending is going. And so once you would start to attach a goal with your business and with your, and that's why Shantel, she talks about working from, you know, the end to the front. Once you understand your goals, you'll start to be able to look at your spending and what is where you're putting your money. And so that's super important. And I think what Kim said, the envelope system, keeping things by month in an organized way, you'll be able to go back to those receipts to see, oh, I went to Target on this day, you know, I used my debit card, but here's the receipt, or I can go back into my bank statement and see what that charge was. The bank statement is your best balancing on Finance Fridays to see what you spent, or your bank app. And Nadia, she probably knows, she probably goes through that with banking customers all the time, of, you know, being able to go back and look and be accountable for your own purchases and accounts, and not have to take time, call the bank and find out what happened.
So yeah, that's a quick plug for Nay, who's one of our collaboration co-founders. She's also the branch manager for People's United Bank in Hamden, Connecticut. So Nay, I know we just put you on the spot, but from a banking perspective, what do you have?
There's a lot of, I'm going to back down what Latrice said. There's a lot of apps that depending on where your bank is. Like I know I use the one in my bank that's actually built in there. That's a start if you don't have anything for budget. And it's amazing because, you know, you could change it, but once you do it, you have to take the time to do it, categorize it, and it will tell you if you are green or red. And sometimes, and it categorizes it with the debit cards, with the credit cards. You can have a budget and stick to it. That is the best thing, because sometimes there's other apps, but most people don't realize it's really, 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 it's in your banking, because most banks now provide you the app for the financial to budget, and they also, most banks now provide even credit score and monitoring. So these are things that we don't want to pay for it. You know, look up your bank and know, like I know for a fact, my bank have an app that would be like $100 or more if anybody has People's Bank, but it's just, and you know, it's something that's free. It monitors credit, emails, passports, everything. So there's so much that your bank itself has to offer, especially if you're a business customer. Look into that. There's also the e-treasury side. That a lot of it you don't have to pay for it. So as a small business owner, always look at your bank and see what you have to offer. That way you can start from there. I know for a fact I have two banks, because unfortunately I work with too many banks. But I have two banks that I use that, and every month I get the rundown of I'm red here and I'm not red here. So I'm able to balance, to Latrice's point, say, hey, I spend too much on restaurants. So this month, I'm really going to try to balance myself out, especially with the pandemic. I mean, Tuesday was a good example. I came with all the idea to cook, and as soon as I got home, I was like, fix and I did it. So there goes my budget. So those are some really good pointers.
Okay, thanks, Nate. I really want to move on, right? I want to get to Kim, and I want to talk about retirement and healthcare. I do want to.
Before you do that, Latisha, I just wanted to say, when we were getting ready for today, we knew we were going to get stuck on budgets for a while. We knew that. And our planning and our discussion, we came up with something new. So we're going to start hosting a quarterly panel or webinar, and it's going to be from side hustle to CEO, and everything you need to know to take that business that you're doing from side hustle status up to CEO, because there's a lot to unpack in all of these topics that we have today. So we're going to make sure that we take time and fully dig into it. All right, now I'll give it back to you, Latisha.
All right, Kim. So we saw in the budget allocation, right, that a certain percentage should go to retirement and healthcare. And I know a lot of small businesses don't really consider the retirement and healthcare piece of a small business, and they're there for us, right? They're there to benefit us. So Kim, can you talk about what are some of the retirement options that are available to small business owners?
Love to. So for business owners, there are a couple of two or three real options that allow them to make contributions either for themselves or themselves and their employees. So one of the first questions that they should ask is, who did they want to include or have participate? If it's just for themselves, the options can be everything from a SEP to an individual or solo 401k. And then if they really want to be able to include their employees, their options would be the SEP or the simple IRA. And
Yeah.
then, I mean, we can
And just discuss the rules around the SEP. So if they're contributing for themselves, then they also need to contribute for their employees, right?
Correct. And you can make the decision from year to year whether or not you want to make contributions to the SEP. The simple, you have to make contributions every year, and you have to include your employees. You don't have to include them in the SEP, but it is encouraged. Or actually, you do have to include them. They have to be 21 years old, so the rules are different. For the SEP, the employees have to be 21 years old and have to have worked for you for the last 3 out of 5 years and have earned at least $600 in the previous year, paid by year. For the simple, they would have to have earned at least $5,000. They have to contribute at least, you have to contribute at least 2% or match dollar for dollar 3% of their contributions. So that leaves more room, or leaves you as the employer on the hook for more potentially on the simple. Because if the employer is making, or if the employee is making their maximum contribution, you've got to match that dollar for dollar up to the first 3%. They don't have those contribution parameters, so to speak, around the SEP. Does that make sense?
Okay. Yeah, and so I know when you're a corporate employee, a lot of that is already taken care of for you, right? You just need to sign up. But you can that same 401k that your employer can open for you, you can open that yourself for your small business, and you could even be, and it could be in your business name, right? I know I did a webinar a couple months ago, and I showed how you could literally, one of the companies I like is TD Ameritrade. It's so simple to go on their website, like open an account, and it'll list, do you want to open an individual account? Do you want to open a solo 401k, a SEP IRA? Like everything is there. You just click through a couple screens and it's done. And the tax advantages, if you're just starting out and you're not making a lot now, you may not care for it. The tax advantages may not mean that much to you, right? But our end goal is to make a lot more. So if you get all those systems and everything in place now, it's there for you when you really need it. And Kim, what about healthcare, right? Can you tell us what a high deductible health plan is and if we can open one for our business?
Sure can, but before we go there, let's jump back to the 401k, solo 401k for a second, because the other benefit for this solo 401k is that as a business owner, you can—
Kim, you seem a little hard to hear.
Oh, let's see. How about if I turn my volume? How about now?
That may help.
Volume is important. So solo 401k, one of the other big differences is you can make contributions as an employee and an employer to the solo 401k. So you can still contribute the same amount, so to speak, in quotes, that you can contribute to the SEP IRA, which for 2020 is $57,000 in total. But the way you can break that up as an employee versus taking a net 20%, which is the allowable amount of your, so I'm kind of speaking fast. So for IRS purposes, for 2020, they allow you to take 20% of your net income as the employer, right? So that you can pay yourself, even if you have a low income, you can pay yourself up to $19,500 and completely contribute all of that to your solo 401k. You can then take an additional amount of your net income and up to 20% of that net income and contribute it as an employer. So I'm sure what on the back end, the taxation is different.
Okay, and Jennifer had a question. So it's SEP, S-E-P, Simplified Employee Pension IRA. And Jennifer actually this year, right, she opened her own naturopathic healthcare center. Is that correct? So I would highly recommend you look into all these options, especially if you're gonna have employees, which I think you're looking into. So definitely look into the options and see which one is best for you.
Yeah, I wasn't sure of the spelling here. So it's what does it stand for?
Simplified Employee Pension, SEP,
Okay.
S-E-P.
Yes, and I put it in the chat too. I just ran to Google and grabbed that. So you ladies correct it if it's wrong.
No, that's right. Are there any other questions around 401ks before we jump into the healthcare portion? Okay, so Kim, can we talk about healthcare? Right, I know there's a such thing as a high deductible health plan. Can you talk about that and talk about the options available to small business owners?
Sure. So we were talking about health plans for a group. So there are, clearly they run the gambit, and many of the plans now allow you to classify as a small group when you have 3 employees or less, right? So you can actually qualify for group rates if there are at least 3 employees. A lot of people get intimidated and think, well, I've got to have 15, 20, 30 employees before I can qualify for group rates. Not necessarily true. That's 1. 2, your high deductible plans are going to have, with an HSA, are going to have a higher deductible. So be clear, you are going to be responsible for the first X dollar in services, right? So for example, it's not uncommon to see a $3,500 or $6,800 deductible on a plan. That's what you were responsible for before the plan kicks in. The advantage, though, is that by allowing individuals to open up those HSA accounts, you're allowed to put money aside that can be tax deducted or deferred, that allow, it's tax deducted, the assets grow tax deferred, and they were intended to allow people to save long-term for health insurance and or healthcare needs. So that when we're 65, because the accounts roll from year to year, when you're 65 or 70, the theory was that there's another chunk of money that you have access to help you cover costs. That makes sense? Did I dump? I know I can kind of roll on.
No, I want to ask a question though, because I think one thing that intimidates people, especially as we're growing, Jen is about to become a full empire right now. One of the things that, don't laugh, it's true, that might be overwhelming is like the cost of providing healthcare or offering healthcare to your employees. So what should businesses expect as they're growing and now they're going to provide or offer healthcare?
So one of the things I tell people is, before you're ready to do it, let's sit down and discuss it, right? Because healthcare costs are predicated on the age and the gender of your employee. So that's going to drive the premium. So how will you even know what to expect if you've never run the numbers? And because it's not just an arbitrary number, you can't know what portion of that budget you should be setting aside for the future if you've never had the conversation with an agent or broker. That's the first thing. Have the conversation, even if you're not ready, so that you know what you need to budget.
Thanks.
Okay, so I want to jump back a little bit to taxes, right? Because all these HSAs, a high deductible health plan, retirement plan, they all have tax advantages that benefit us. Latrice, can you talk about how the different business structures, how the taxes are different for the different business structures that are available?
Can speak on that. So when you have what we found out is that an HSAs are usually given by corporate companies. You put money aside every month to go towards healthcare expenses. But you can actually open an HSA at a credit union or at a bank. So you can put funds aside, especially as part of our chart, funds aside every month to go towards those expenses when you have that high deductible plan. So like for instance, my glasses, I know I might need $600 a year. So I'm gonna put away $50 a month into that HSA to go towards my glasses. And so knowing what your healthcare expenses are, I think, especially attesting to what Kim said, is you can gauge what your budget is going to be for those healthcare expenses. And then you're allowed to, because it reduces the amount of taxable income that that the IRS is able to tax you on. So those are ways you can reduce that amount of taxable income that you have, is to have that HSA to cover those expenses, and then you drawing the funds out of that account when you need them. Latisha, did that answer your question?
In your HSA, do those funds carry over to the next year, or do you have to use it at the end of the year?
Over. That's the whole point. You can have that account for 30 years.
Yeah.
Yeah. When we hear about how much taxes did Trump pay? Was it $750? Right?
Yeah.
Yes.
These are all the strategies that the wealthy utilize to help lower their taxable income, right? It's a little bit of everything. They make sure they take full advantage, and we don't. So.
And Latisha, I am going to add to that. I mean, when being a banker, I see it April 15. They all run in here to put money into the HSA and to also put money into the IRAs, because those HSA people take that for granted, but it could become retirement money. You could, like to Kim's point, you could have it for 30 years, and then when you're done, you could roll it into a retirement. So that could become a retirement fund as well. People just take that for granted, but it's very important, especially small business owners. Like, take advantage of it as much as you can. And you can open it with any bank these days.
And so and when we talk about taxes and HSA, when you're a W-2 employee, and that's why we talk about coming from a side hustle to CEO, but when you're an employee, these things just come out automatically out of your check. You're not paying anything different than what you would pay as a W-2 employee. It's just taken off the top. But as a business, when you start to operate in that way of just taking the funds off the top of what you need to support your life in the future, these practices help you little by little put them in. And one thing I read is that people always want to pay the lowest tax, right? You pay the lowest tax, but then you're putting in the least into your Social Security. And so what happens is a lot of small business owners, they work 30 years and they only have a small bucket, into retirement, into their Social Security. Why? Because they took the lowest every year. So the stigma of paying the IRS, we really have to really evaluate and break down what that employment tax is, because it actually is going to move you into your future sometimes, and be able to give you that, Social Security. Well, we don't know by the time I have Social Security if it's going to be there, but what is how it's supposed to work today is we're putting into the future so we can have that Social Security income.
Latrice, I think that's a good point, because I think some small business owners, especially when you're in that hustle mentality, you don't realize that when you're paying taxes as a business owner, you're contributing to your Social Security. So I think it's because, again, conversations like this often don't happen enough in our communities. So I think it's important to add that reminder so that people know. And then I also wanted to touch on what Latisha was saying about the automation part of it. Just get into the practice of automatically, you know, I started in my 20s and still in my 30s, but, you know, automatically saving to accounts, right? Automatically having different loans and bills thing paid, coming right out of my check, coming right out of my bank account when I'm not even looking at it. It's not my money, right? And it should be the same way when we're thinking about the HSAs that we need to set up, our health insurance, our investments, and all of that.
And I want to bring up pricing again, right? If you fully understand your numbers, if you fully understand how much you need to pay in taxes, how much you need to set aside for retirement and health insurance, work that into your price. Start backwards, right? Figure out how much you want to put in your pocket, figure out how much all those other buckets are going to cost you, and add that to the amount you want to put in your pocket. And that will definitely help you with your pricing, because a lot of us price our services so low that by the time we take out all these expenses, there's not much left. And then you work hard all year and you don't have that much to show for it. You don't have that much to save after you take out your expenses, and it's just you're spinning wheels.
I also had another point. Another point you had, no, it's fine. Another point you had made about the taxes and the stigma. It's like, write everything off, right? Write it off because I don't want to pay taxes. Well, guess what? If you're not showing an income and you go approach investors and you're applying for a certain loan, they're not going to want to give you any money because they're like, well, you're operating a nonprofit, you know, your business is not profitable. So why would I give you any money to invest in your business if you're not going to see a return, right? So there's that balance too. And kind of to Kim's point, you have to sit with someone and like an advisor, right? And think about tax planning and all those different things. Where can I actually, you know, write off certain expenses or put things in retirement or HSA or other places? I don't know. Again, I'm not a tax accountant, but you know, you want to think about, well, what's the long-term goal, right? What are my goals? What money do I want to bring in after everything's accounted for? And then, yeah, if I need investors, I want to show a certain amount at the bottom line, right? So it's I get it. No one wants to pay taxes, but at the same time, you're gonna shoot yourself in the foot by trying to write everything off and make it seem like I didn't make any money this year. So, you know, sorry, Uncle Sam, but yeah, just wanted to add that point.
Sammy had touched on something you did too, Shantel. So when you're applying for a loan and you have to go to your accountant and request that profit and loss statement, yes, that will cost you money. But many times, maybe not 100%, many times a bank will take your own profit and loss statement. It doesn't always have to be certified by your accountant or CPA, but if you have your own profit and loss statement, you can submit that for your loan. And then the bank, if they want one certified or they want to know that's been reviewed by your accountant, that's still going to save you money because you do that already and have an idea of what your income and expenses look like. So that's important. It does save you money other places when you're taking those Finance Fridays and, you know, just a little bit of time every week into doing that.
And also, if you're going after contracts and bids, RFPs, you want to make sure you have these reports and you have access to them. I remember years ago when I was first starting out thinking I could go after some contract that I went after and obviously didn't get it. What they wanted was these financial reports, and I had my sexy spreadsheet. I didn't have QuickBooks. I didn't have a bookkeeper or an accountant. So I had to hurry up and find somebody now to hurry up and generate these reports for me from my little spreadsheet. And I paid good money for that report to submit to that RFP that I didn't even get, right? So one of those business lessons learned. After that, it was like, okay, maybe I should get one of these QuickBook thingies. Maybe I should look into a bookkeeper. So you also want to keep that in mind when you're thinking about professionalizing your business and taking it to the next step. Right here, it might be cool, right? But if you want to go to the next step, you're gonna have to mature a little bit with your finances. Don't tell anybody Sammy said that because they wouldn't believe that. The other thing is I tell everybody here, there's a lot of you here in my circles, and you hear me say all the time, raise your prices. Those 3 words, they come into the room before I enter, because I tell everybody, raise your prices. We set our prices based on our own pockets, and we can't do that, right? We are in business. We have overhead costs. We have employees. We have 1099s. We have operations. We have lots of things that we need to pay, right? And that needs to be incorporated into our pricing. When we talk about the financial aspect of it, paying your bookkeeper, paying your accountant, doing your taxes, all of that costs money. And you can't say, I'm going to charge $15 for my service because I want you to be nice to me. No, it's going to cost $45 because I got to put tax on it, okay? So that's Sammy's 3 words, raise your prices. But not for Sammy though, but no, go ahead.
And I just want to reiterate what Shantel said, because it's so important. Do not write off everything for your taxes. Instead, as Sammy said, raise your prices, work that into your price. Because I even made the same mistake. I was a corporate employee for years, right? So, and then I had my side business, and I didn't want to pay extra taxes, so I was writing off everything. So now that I am no longer a corporate employee, and I'm a W-2, and I'm a small business owner, I don't have that history of income in my small business anymore, right? Because I was writing off everything. So raise your prices instead. I'll be back 1 second. My kids are home, sorry.
Like, let me in.
Right. Sound like my kids. Yes. No, it's definitely true. Raise.
Yeah, like when you talk
about your service and your products, right? Being confident about them. Sorry, Latrice. Go ahead.
Sorry, when you talked about that $1 you want to bring home, but then when you look at it, it's really only 20 cents. You need to raise your prices by like almost 200. You need to like triple your prices.
Right. Exactly.
If you want to pay yourself a livable wage, right? Think of it that way.
Livable wage.
Right. Exactly. I always use the dollar example. Everyone knows what a dollar looks like and what it can do, right? And you break it down into cents, you chop it up. Seriously, if you want your change to be 30 cents, all you can spend is 70 cents. All right, well, what can I cover with 70 cents? You have to think about the overhead and everything else. If you can't do that and you're spending more than $1, right, then you're in the red at that point. And like Sammy said, raise your prices. You have to increase your prices from there. Yeah.
Kim has something.
Oh, right.
We can't hear you, Kim.
So if you're going to write it off, do it strategically, right? So you pay yourself as the employee or the business owner. You're paying yourself a set salary every month. And then you go and you open your various accounts that are, right? So you've paid yourself, so you're showing income for the business. But then you open the accounts either in your name or the business name, where you're making the contributions to your either retirement plans and or an HSA. And now you're taking deductions that still show on paper that, and you're still saving, right? So you've paid yourself, you're showing a salary, so that when you're ready to apply for almost anything as a business owner, right? For rent, if you're trying to lease space, if you're trying to expand your business, you've got to show profitability. But you do it strategically in taking the tax write-offs through the various HSAs, the 401ks, find ways to take a legal cut. That is how they put money away and keep it in their pockets.
So Kim, when you say that, they should be putting towards those other accounts directly from their business account?
Pay themselves.
Okay.
So show that the business is profitable and that they're taking a salary from the business, right? Because one of the things that really hemmed a lot of people up with these PPP loans was showing a salary, right? People just take the income off the top of their business, or say, I've got extra cash flow this month and I'm going to take that, without actually showing a set salary that they're paying themselves. And that's another thing that the banks really want to see when we're trying to grow. So don't just don't just automatically pay it out to yourself. Pay yourself the salary and then pay it out.
So Jennifer has a question, and Jen, this question came up when we all got together to talk about this. And I know Shantel has some really good points on this. So Jennifer wants to know, how do you decide what to pay yourself? I know I underpay myself, laugh out loud. Is there any kind of formula? We all do.
Well, that kind of goes back to that dollar, right? Or how much you want to take home. Well, what are your household expenses? How much money do you need to take home? Let's say in order to cover my household expenses, I need to make $50,000 a year. That's your salary right there, right? But also you have to make sure it works within your budget. So once you account for all your other operational expenses, your taxes, other overhead expenses, then it's like, okay, that's where I need to set my price at. So really working backwards. This is my salary to cover my household expenses. Here are all my operational and business expenses. This is how much I want to take home, right? Outside of the salary, like your net income. And then what does that add up to as far as what I should be charging my clients?
And then is there anything we need to consider when it comes to paying yourself, your payroll, and your business structure?
Yes. So if you are LLC, you technically cannot pay yourself. Like you can't run payroll to pay yourself. So you can be an employee of again, I am not a tax expert, but what I know personally is if you are an S Corp. And now you can be an LLC, but have a S Corp filing status. So you may want to reach out to your local CPA and ask them about that and how you fill out the application to apply for that. That will then allow you to pay yourself as an employee and run payroll. But if you are LLC, if you have an LLC now, you know that you fill out
owner's draw.
Excuse me?
An owner's draw.
It is an owner's draw, but I was saying a Schedule C, it's a part of your taxes. So if you're trying to pay yourself out of an LLC, you can't do that because you're going to end up paying taxes on that money anyways, if I'm making any sense. So yes, Sammy, the method would be taking an owner's draw. So you're just pulling money from the business to pay yourself. But if you want that line item to show up as like an employee, or you want to show that I'm taking a salary, like Kim was talking about, then you need a different type of status. So, and you can either be a S Corp, a C Corp, or any other type of organization. But again, I would definitely recommend talking to a tax accountant to see what's the best approach, whether remaining as an LLC with a S Corp tax status or just actually changing.
And also, I think moving from side hustle to CEO, we do have to, Jennifer talked about how much should I pay myself. There's a lot of side hustlers who aren't technically paying themselves, right? They're just like working the business, not even paying themselves, especially if they are still running a part-time or full-time job. But the one thing the PPP taught us was the government's looking at your payroll and they want to know what you're paying. And they paid the PPP according to your payroll that you paid out. So if you're not, that was one thing that prompted me to start paying myself a little bit more too. We go through PPP again, government gonna see Sammy's getting some kind of income, right? So, and it's about those books, the reports we need, setting ourselves up for success when these opportunities come again. So going from side hustle to CEO, guess what? CEOs, they get paid and they get bonuses and they get stocks, right? They get all these options on top of that. We got to move into that CEO status.
Absolutely.
And the other thing I wanted to touch upon before we open it up for questions, we have like 10 minutes left, is we saw that savings bucket, right? But part of savings is also investing. That is my absolute favorite topic. I like to say we budget to save, we save to invest, and we invest to build generational wealth. Whether you invest your business income and open up a brokerage account under your business name, or you're paying yourself a salary and then using that salary to invest under your personal name, either way, make sure you're pricing your services enough where you do have money left over to save, and make sure once you hit that emergency fund amount, the rest of that needs to be invested. Because if we just leave it in the bank making 0.5%, you're actually losing money as time goes on, right? So investments open up a whole other conversation and it can get complicated, but you can keep it simple. You could pick 1 or 2 stocks or a couple, I don't really care for mutual funds, but I like ETFs better. Pick a couple of those, put the same amount in every month, and really use that to grow wealth over the years.
And again, we're going to be unpacking investments, insurance, and payroll and everything else in our quarterly series, because we know that these conversations need to keep happening.
Yep. So I want to open up the floor to any questions from our guests in these last 10 minutes.
Yes, so come off of mute, show your cameras. We want to see your lovely face, or throw your questions in the chat. Also, everyone, don't forget to leave your contact information in the chat. What do? How can we contact you? How can you help us? How can we help you make money? Put that information in the chat for us. We will be sharing that. So come on, off of mute, show your faces, put it in chat. Let's go. What questions? I know we've talked about a lot, so I know y'all got questions.
Definitely covered a lot. Well, I will say I'm definitely excited about like the future financial panels. There is a lot to unpack, and even when we were preparing for this meeting, we were going on and on. It was like a rabbit hole, and so there's a lot to think about. And you know, really, a lot of people just get intimidated by all the information. But once you get used to looking at reports and familiarizing yourself with various things, you know, it becomes easier from there, for sure.
Okay, actually, yeah, Shantel, thank you. I want to go around and have all our panelists say.
We do have a question. Tanisha, hey Tanisha, thanks for joining. Are there any recommendations for local CPAs?
Not off the top of my head, unfortunately. We actually, Sammy and I were talking about that. CPAs.
Well, my whole issue is I was trying to find a Black CPA, couldn't find a Black CPA. My recommendation would be Dina O'Donnell, who I think she's based in Brantford. I've used her, Latisha's used her, Latrice has worked with her. Nay, I don't know if you met Dina yet. I can't hear you. We can't hear you, Nay.
Oh, I'm sorry. So no, I say no, because I am always, as a banker, I am always looking to connect with CPA, but I'm really looking for a Black CPA because they understand our needs, and it is so hard as a banker when I am trying to, especially for me, and I'll put it out there in the group for everybody to know. I know we like to save money and stuff, but always report some things, because I go to try to help out my business clients, and when it comes to lending and banking, we need to show something, especially now. So always put that in the back of your head. So I'm always looking for a Black accountant, because I want my customers to go and get educated of what we all want to, like, save money and sometimes hide money, but it's not easy when you're trying to get a loan. Hey, let's just say it for what it is. You know, because we have that luxury as a business owner, but as a banker, I am sitting here trying to tell the story of my customer through my underwriter, but when there's no income showing, it's almost impossible to make the case. So if anyone know a Black CPA, I have a lot of CPAs, they are not Black. So I am, I'm looking, you know.
Latrice, you sent me the contact for the Black CPA, but which state are they in?
She's in Maryland, so she's not a CPA, she's an accountant, but she has an expensive amount, because she made sure I understood that when I talked to her. And yeah, we're trying to, she's actually worked in different states. She does one of her specialties is onboarding nonprofits, but she had such a wealth of things that she's experienced and done, and had a team of people within her own network that she's created, like her own networking group.
Yeah. Yvonne, are you talking to us?
Like the tax divas or something, some kind of divas.
Oh, I like that. No, oh, okay. All right.
Yeah. So we're trying to get in connection with her to bring her in. So we're working on that now.
Okay, awesome.
I know they can work with different states. I have accountants that are like somewhere in DC or somewhere, and I can still get them to get
Yeah,
you know,
she had people, even some of her people were in Michigan. Like it was like coming down the East Coast. So I look forward to bringing her into our groups and working with her.
Yes. Any other questions for our panelists? No? Latisha, monitor the chat while I go to my verbatim. Hold on a minute.
Capri
Oh,
and a Black accountant into the chat. Do you have her contact info, Capri? Brenda Burton.
I'll look for her on LinkedIn also.
All right, Kim, any last words of advice you want to share with everyone?
No, I don't. Well, that's on the. I'm not good on this spot. Nope, just save. If you have any questions about health insurance, group insurance, I mean, people don't well, let me rephrase. I think people do understand when they understand all their numbers for health insurance. So even as consumers, individuals, if you're a business owner and you've got a plan, even through the marketplace, it's really important. And I'm saying this because it's enrollment season and it's top of mind, but really understand your numbers, because you want to talk about blowing up a budget, not understanding what your out-of-pocket maximums are, what your deductible is, when you hit that deductible, when your co-insurances and your co-pays start hitting, it will blow up a budget. That's my last word.
Thank you. Latrice?
I just want to say that take the overwhelming out of it, and really it's just a step-by-step process. And like Sammy said, you do it on your own for as long as you can, but understand that once you get so big, it may be time to hire someone to do it if you don't want to do it yourself. There's also, for people who say, doing the numbers and all that is intimidating, when you really understand, or when you really work in the numbers yourself, instead of just handing everything over to an accountant, there's a different type of appreciation you'll have for your business growing. And when the IRS comes and asks you a question about, or anyone comes and asks you a question about where money is allocated and spent, you'll feel better knowing and at least having an understanding of where your money is going. One thing I heard about Oprah knows how much her light bill is. She knows how much, and if we don't have Oprah money, we may need to take some time and
oh no, Oprah said she can't remember last time she went inside a bank or used a debit card. I don't know.
Oh yeah, nobody, sorry Nadia, nobody goes into the bank anymore. You don't have to. But your
don't need to be sorry, Latrice. I work in a bank, I don't bank in the bank.
Right. Nobody goes into the bank.
Oh, Nay. I was like, who's Nadia? Nay,
sorry.
Oh, yeah. No, even customers call me Nadia today. I was like, who's Nadia? It's all right. No worries, please. Don't worry about it. It's Nay.
Yeah, you may not go into the bank, but you don't need to anymore.
You don't want to see me when somebody walks in here and trying me to balance the checkbook. I print their statement. I was like, yeah, you might want to do that at home. Yeah, I'm not doing that. I'm sorry.
And Shantel? Shantel, your last final words?
Is really to just piggyback on what Latrice said, just really familiarizing yourself with the numbers and feeling a bit more comfortable with it. Look at YouTube videos to think about the different tools that you can use to keep track of your finances. If you want to be brave and hop into QuickBooks, there are plenty of videos and plenty of blogs and different ways to acclimate yourself with the system. Ask questions. If you have a bookkeeper or a CPA managing your finances, you need to ask questions. How did you get to this number? What made up this number, right? Look at your numbers for trends. Understand what is happening. What are the numbers telling you, right? It's all numbers. And of course, I live in this world. It tells you a story. It's either a good story or a bad story. Someone mentioned earlier, hey, I noticed I spent too much money in this area, you know, dig deeper into it, but really just pay attention what's happening to your business, and don't be afraid to ask for help too, and pull from various resources.
Sammy?
Benny, you had a comment?
I'd like to thank you for inviting me. I really appreciate this. I can see how serious you ladies are. Just remember, like, this is 101. This information, this knowledge is good for you, and you want to build on the information. The points about budget, and profit and loss statements and all that, right on, really right on. I see an old friend Elaine, Thomas Williams. I say hello to you. And if you invite me, I'll come back. Thank you.
Oh, you're always invited. We're the collaboration of minority women professionals, but we love the support of our men. Thank you, Benny. Latisha, did you have any final thoughts before I talk about the collaboration right quick? Or nay?
Yes. One of my favorite investors says, you'll like this, Sammy, treat your dollars as employees, or treat your money as employees, right? Every dollar has a job. Make sure that they're all allocated correctly, automated, and let's work. Let's make this money.
Let your money work for you.
Yes.
So I will hand it off to Nay. I will just say, this is our collaboration. We are the collaboration of minority women professionals. I am the president. Latisha is the vice president. Latisha and Nay are both co-founders. We have another one, Sydney Simpkins. Nay is also our membership coordinator. You will be hearing from Nay or Sydney in the coming days, because we have a lot of members on the line. But if you're not a member yet, you need to join, because you have expertise that we can put you in a seat to share. And we can have a panel with you here. You can host your own webinar, and we want to give you that opportunity. Okay, our members, Nay, I'll let you talk about membership right quick.
Yeah, so thank you, Sammy. So I am Nay. I'm also a co-founder and a membership coordinator. So any of you that was in the last webinar, you did get an email from me. I will do that as well. So, and now what I would like to do is, anyone that's not objected to getting a phone call, this is the benefit why I enjoy this. Even as a banker today, I learned some things that I never knew had existed, like Kim, you know, once in a while I wanted to become a financial advisor. I dropped that, but just hearing from you kind of rekindled that. So this is things that it doesn't matter. I've been in banking 15 years, but these are tips that you could use, and some of these I can even transcend to my customers. So anyone that's not a member, please, this is the reason why we have this group. Amazing group of women, like-minded. You know, we go to each other for business first, but we also tap each other for knowledge. We have a website up and running right now. Different level of membership. The regular professional or business owner membership is $125. Then we have our senior level membership, which is $65. And we also have, like, we want to mentor college students. So different level of membership. Please check out the website. You will get an email from me in the next 24 hours. And if you prefer me calling you first, just email me back and we can set up some time. For any member, we have one-on-one. You know, I did a couple of calls with a couple of members. But just to go over, ask a question, you know, this is amazing. I'm always bragging about this collaboration, because this is different. You know, there's so many networking groups out there, but what you get over here, I've been in networking group for so long, but I enjoyed myself even, you know, as a member. So please reach out to me if you have any questions. I put my information in the chat group, but I'm always available to discuss anything with the membership. So thank you everybody for joining today.
Yes, so like Nay was saying, our standard membership is $125 a year. We had a bunch of you who joined when we had our membership sale of $99. So thank you for joining during the membership sale. We also have an affordable payment plan of $13 a month. So when we're thinking about
reminding me of that,
you can afford, if $125 is a bit much right now, for only $13 a month, you too can be a member. They love it when I do that. Stop laughing, Latrice.
I just have to say thank you to Latisha and Samantha for providing opportunity every month. My eyes are brightened every time you ladies are in the room. And because we don't know in Connecticut, and and we may have some people outside of Connecticut, but Connecticut, we need to see what we're doing. There are some talented people here, and for some reason, we are a little mute. So I think this is a great, safe place for women and entrepreneurs to come together and show we're actually already doing it. One thing about my 9-to-5 job, we were doing the work and not giving ourselves credit, and we have to that has to stop. And I had to fight with people over making sure they're giving themselves credit for their work. And so just being pioneers in this right now, in this time that we need it. It feels, I hope this is what it felt like in the 1860s for African-American women, like when we're just starting to make moves. And I'm using that word pioneer on purpose. So thank you, ladies.
I love it. And like I like to say, we was on a call yesterday and we were talking, I think it was the BBA call at 7 a.m. networking. That's what we do, right, Benny and Latrice, 7 a.m. networking. I want to see you guys on the BBA call next month. But we were saying that we get overlooked. We are not seen. We don't get the recognition to be on panels like this because we are invisible to a lot of people. You know how many people tell me, look me in my face and say, Sammy, I don't know any Black people. I don't know any minorities, right? We're completely overlooked. So this is why, that's why I say I'm not fighting for a seat at anybody's table. I will build my own. And that's what we did here, right? And we welcome you. We want to highlight you and spotlight you and make sure you get the recognition you deserve. And we had a comment that I wanted to share with Marcy. She says, my name is Marcy. I've had my business now for 24 years and I still got good information from you ladies. All right. That's what we love to hear. Our website is in the chat, cmwpnetworking.com. Go visit, see what we about, right? But we built the website for you ladies, for our memberships, and Benny also. So check us out. Learn more about our co-founders who's leading the organization. And I hope to see you as a member. May will have a welcome call and sit down and chat with you as you become a member.
Please, and spread the word to everybody, please.
Spread the word. I am grabbing the chat now. I'm going to shoot that over to everyone. The replay will be available later tonight. You will get that it'll be on our website. It'll be on our YouTube channel. You know how Sammy doing social media. It's going to be everywhere, okay? You can count on that. Trust me. So make sure your information's in that chat. Click the links. Network with people. We're going to send out the contact information. Let's do business. I want to see money flowing amongst ourselves, okay? Latisha, any final words?
No, that's it. Thank you for joining and look out for our next event, hopefully next month.
Yes, awesome. Happy Thanksgiving, whatever you guys are celebrating next week or not, enjoy the time off. And
we'll hunker down, stay home, don't go anywhere.
Yeah. Wear masks.
I'm not trying to catch this thing.
I got, there we go. Wear a mask.
I have a real one.
I got a real one too, Nay.
Bye, everyone.
Bye, everyone. Thank you.
Bye.
Bye. All right, take care.